Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 374 on May the 9th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Iris Energy, HUD 8 Corporation, and Intel Corporation, and we discuss three new trades on TransOcean Group, American Airlines, and Carnival Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the U.S. markets ended the week slightly lower. The Dow Jones Industrial Average lost 68 points, closing at 41,249 points. The S&P 500 index lost 26 points, ending the week at 5,659 points. Now it's time for the topic of the week. The topic of the week is emotions. Now, anyone who knows me knows that I love music, and I actually considered singing a little bit of the Bee Gees song, Emotions. I'm more of a fan of Destiny Child version, but that's neither here nor there. The question this week is, are emotions good or bad for trading? Lots of people will argue that they are bad. That's the reason for algorithmic trading. It removes the weakness of humans, our emotions. I've also witnessed dozens of times where my emotions protected me from a massive loss. So which is it? Are they good or are they bad? My answer is, it depends. If your emotions are consistently leading you to go against your trading plan, then they're bad. If your emotions are not hindering your ability to enter and exit trades according to the plan that you've set out, then they're fine. There's no always good or always bad answer when it comes to emotions. We are emotional beings, whether we like it or not. We also tend to program our emotional states into algorithms. That's why the market is still driven by fear and greed, even when the algorithms are at work. So I prefer to embrace and manage my emotions rather than to deem them evil altogether. Self-control and discipline are always important aspects of any performance game, and that includes trading. So that's it for the topic of the week. Let's get into the trading review of last week's trades. We're going to start off with the covered call on Iris Energy, symbol I as in India, R as in Romeo, E as in Echo, N as in November. At the time, the stock was trading for $6.53 per share. I looked at buying stock and selling the May 7 call at 32 cents, hoping for a return of 12.10% in 2 weeks. Well, shares of Iris Energy grew 51 cents, ending the week at $7.04 per share. The call option that we sold grew 17 cents, leaving us with a net profit of 34 cents if we were to close that trade out immediately. Now, with the stock above $7 per share, we're all set to make twice as much profit if the stock holds its ground over the next 5 days. So no adjustments are needed on this trade if you're willing to hold it unto expiration. Of course, if you'd like to grab the 5% profit and close out the risk, well, I'd understand that too. This trade has worked out so far, so nothing required, but you might just want to grab some profit. Next up, we have the credit spread on HUD 8 Corporation, symbol H as in hotel, U as in uniform, T as in tango. At the time, the stock was trading for $13.80 per share. I looked at selling the May 13 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Well, shares of HUD 8 grew 9 cents, ending the week at $13.89 per share. That out of the money put spread that we sold is still out of the money, and the share price is still 56 cents above our break-even point, so we don't have any reason to close this trade out early so far. There are 5 days left before expiration, so you still have to keep track of that stock. Our goal, of course, is for this trade to finish out of the money and worthless. Now, you want to keep track of stock over the next week and have a plan for how you're going to defend it if this trade starts to move against you before expiration. And finally, Last week, we had a debit spread on Intel Corporation, symbol I as in India, N as in November, T as in Tango, C as in Charlie. At the time, the stock was trading for $20.62 per share. I looked at buying the May 20.5 call spread for 33 cents, hoping for a maximum gain of 17 cents, or that would be a return of 51.52% in 2 weeks. Well, shares of Intel picked up 80 cents, ending the week at $21.42 per share. The in-the-money call spread that we bought is now even more in the money at this point. The stock price is $1.09 above the break-even point, and we have 5 days left until expiration. So no adjustments are needed at this point, but definitely be prepared to defend this trade if need be. So far, we're on the way to collecting that 51% return in 2 weeks. So not bad. This has been a great trade so far, but stay on top of it. So that's it for the trades from last week's show. This upcoming week on Friday, May 16th, is the expiration for all monthly options in May. All new trades on today's show will use the June 20th expiration for monthly options in June. And these trades have 6 weeks until expiration, which is kind of a long time. So keep that in mind as you're watching these trades. So we're going to start off with our covered call on TransOcean Group, symbol R as in Romeo, I as in India, G as in Golf. The stock ended the week at $2.61 per share. I'm looking at buying stock and selling the June 3 call at 10 cents, hoping for a return of 18.77% in 6 weeks. Now you enter this trade by buying stock for $2.61 per share and selling the June 3 call at 10 cents. This trade makes the most money if stock prices finish above $3 per share. The break-even price is $2.51 per share. In real terms, the stock purchase will require $261 and you'll collect $10 for selling the option. Next up, we have a credit spread on American Airlines, symbol A as in Alpha, A as in Alpha, L as in Lima. The stock ended the week at $11.11 per share. I'm looking at selling the June 11-10 put spread at 34 cents. That could give us a maximum possible loss of 66 cents per spread. Now you enter this trade by selling the June 11 put at 67 cents and concurrently buying the June 10 put for 33 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $11 per share. The break-even price on this trade is $10.66 per share. In real terms, you'll receive $34 per spread that you sell and have $66 at risk. And our final trade for this week's show is a debit spread on Carnival Corporation, symbol C as in Charlie, C as in Charlie, L as in Lima. The stock ended the week at $20.18 per share. I'm looking at buying the June 19-20 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that's a 53.85% return in 6 weeks. Now you enter this trade by buying the May 19 call for $2 and concurrently selling the May 20 call at $1.35. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $20 per share. The break-even price on this trade is $19.65 per share. In real terms, you'll pay $65 to enter this spread, and your maximum gain is $35 per spread. So that's it for this week's show. Thank you guys so much for the emails after last week's show, checking in on me. You guys are amazing. Thank you so much. I hope you have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.